You ever wonder why some companies collapse in a single quarter, while others survive storms that look, on paper, devastating? Here's the uncomfortable truth. Profits don't save you, not when the world goes bad. Liquidity does. Cash in the bank, quick access to funding, short-term survival. That's what separates the companies or investors that make it from the ones that don't. And most people completely ignore this. They chase returns, growth, hype, while the real danger is quietly waiting in the corner. Right now, interest rates are rising, credit is tightening, stock prices are wobbling. Every headline screams profit, growth, and next big thing. But in a crunch, those shiny numbers mean almost nothing. Liquidity, the ability to cover your obligations immediately, is the difference between a minor scare and bankruptcy. Think of it this way. Profits are like fuel in your car. Liquidity is the engine oil. Without it, everything seizes. And unlike profits, liquidity isn't glamorous. Nobody puts it on the front page. Let's start simple. A company earns $100 million a year in profits. Sounds solid. But if it has $500 million in short-term debt coming due next quarter and only $50 million in cash, it's trapped. Profits are on paper, cash is in the account, and the difference? Survival. Now, scale this up. Governments, banks, and even wealthy investors operate the same way. They don't just look at earnings, they stress test liquidity. Can you survive 3 bad months, 6, a year without new income? During the 2008 financial crisis, some firms with massive profits went bankrupt overnight. Others, far less profitable, but with strong liquidity, not only survived, they gained market share. Here's the math most people miss. Let's say a firm has $1 billion in assets. Profits are $200 million a year. Liabilities, $900 million. Looks healthy, right? But 70% of those assets are illiquid, real estate, inventory, or long-term investments. When creditors call or markets freeze, only cash counts. Suddenly, $200 million of profit is useless. You can't pay a $900 million bill with good intentions or a spreadsheet full of imaginary profits. It's brutal, but it's reality. Liquidity isn't sexy, but when times get bad, it's the only thing that matters. And here's where irony hits. Markets love stories of explosive profits. Tech startups, crypto projects, flashy hedge funds, they boast growth like it's a medal. Investors chase it, media celebrates it. But when the music stops, they scramble. Some collapse, some are bailed out, and the ones with strong liquidity, they quietly pick up the pieces, often at a discount. In finance, hype is loud, survival is quiet, and liquidity is the unsung hero. Now let's zoom out. It's not just companies. Countries fail this test too. Argentina, Greece, and countless others have had healthy-looking GDPs and booming stock markets until they ran out of cash. Even wealthy investors miscalculate. They leave capital tied in illiquid assets, convinced growth will save them. And then a market shock hits, and their profits evaporate in days. Liquidity risk is a quiet predator. You rarely see it coming, and by the time you do, it's often too late. This isn't fear-mongering, it's structural. The world's financial system is a delicate web of obligations, short-term debt, and cash flows. When liquidity dries up, even fundamentally strong entities stumble. That's why central banks act like firefighters during crises, injecting cash, providing emergency funding. Not because profits vanished, but because without liquidity, the system collapses. And the lesson applies personally too. Investors, retirees, even small business owners, having money on paper isn't enough. Being able to access it when you need it is everything. So next time someone tells you profits are king, remember, in bad times, they're irrelevant. Cash is king, access to it, control of it, the ability to survive the storm. And here's the lingering question that nobody asks loud enough. How many of the companies, investors, or even governments you trust would survive 3 bad months without external help? The answer isn't comforting. Before you go, think about your own liquidity, your cash, your access to it, and how prepared you are for the next shock. If this video made you rethink the way you view profits and cash, leave a comment below. I want to hear which part surprised you the most. And if you want more deep dives into the hidden rules of money and markets, stuff they don't teach you anywhere, hit subscribe and turn on notifications. Because the next time the system bends or breaks, you'll want to know what really matters before it's too late.